Hello. So, in today's segment, the company we are going to analyze is Nirlon Limited. This is a very interesting company with great cash flows. So, let's analyze its financials and what the company actually does. We're actually going to discuss that also a bit later. First, the financials. So, let's start. First, we have the market cap. The market cap of the company is 4,780 crores. So it's a bit of a small cap company, not the biggest, medium to small cap. Current price of one share is 530 rupees. Okay. Book value. Book value is assets minus liabilities of a company. So book value per share is only 39.6 rupees. Return on equity is an extremely high 59.9%. So extremely high return on equity. Return on capital employed or ROCE is 30.2%, and the company's price to earnings ratio, PE ratio, is 21. Then its dividend yield is 4.91 for the dividend it paid out in fiscal year 2025. So 4.91% is the dividend yield, which means compared to current price of 530 rupees, dividend should be around 20 rupees plus. Yeah, something over 20 rupees should be the dividend for fiscal year 2025. I guess based on current prices. If the price of shares was 400 rupees, then 4. Okay, it wouldn't be like that. Yeah, dividend yield is based on current price. My fault. It should be around 20 rupees plus the dividend. So now let's analyze the company's profit and loss. Here we have the company's profit and loss. All these figures are in crores from 2014 all the way to 2025. Here you can see the sales, you can see the operating profit. Before that, you see the OPM percentage, operating profit margin percentage. Operating profit and EBITDA here are the same. You can see the interest, very important component, the interest on loans that it pays, the profit before tax, the tax, and finally the net profit. Okay. Yes. Also, also here we have the sales growth figures also below. Very important to pay attention to. So let's start. So first in 2014, we have sales of 202 crores. Okay, sales growth of 26% compared to last year. Operating profit of 154 crores, an extremely high operating profit margin of 77%. Extremely high, very, very high. We will discuss how though. How does it have such a good operating profit margin? So from 2014 to 2016, these 3 years, we saw massive double-digit sales growth. Okay, the EBITDA margin was maintained, and so a lot of sales growth all the way to 289 crores. Then from 2017 onwards to 2021, look at the sales growth below these numbers. See, 2%, 3%, 2%, extremely low sales growth, but the operating profit margins were maintained. See, profit margins 75%, 77%. Okay, so first we have massive growth in a period of almost no growth, stable from 288 crores to 317 crores. Okay, at that same time, from 2017 to 2021, we had no sales growth. The net profits went from 51 crores, below me, 51 crores, all the way to 109, 127 crores. Because interest payments just below me, you see 78, 66, 70, 32, 14, interest payments went down a lot. So even during this period of basically no growth in revenue, a very small phase of growth in revenue from 2018, 2021-ish, that era, net profits still rose because of decline in interest payments. And finally, from 2021, we move all the way 2025. 2022, 2023, massive sales growth. Fiscal year 2023, 49% sales growth. Again, EBITDA margins have been maintained. The last 2 years, we have seen very moderate sales growth, 5%. Okay, fiscal year 2025, 636 crores of sales. 503 crores of operating profit margin. We paid 117, or they paid 117 crores worth of interest. Okay. So 503 crores of operating profit divided by 117 crores of interest. I don't have my calculator, but if you divide that, that comes out to an interest coverage ratio. Operating profit divided by interest payments, interest coverage ratio of more than 4. So anything more than 1 is recommended usually, less than 1 can be concerning this ratio, and 4 is generally a very, very healthy interest coverage ratio. So company, according to this, should not have trouble paying back its debt. And finally, we have net profit after tax of 218 crores. But you see this difference, 338 crores of profit before tax, 36% is the tax rate, and 218 crores. It does not really pay that much high of a tax. It has to pay this difference, okay? It does not really pay a 36% tax rate right now. It pays way lower, but that's something relating to accounting. So we look at the profit and loss, okay? Let's take a look at them in percentage terms. Percentage terms. So in the last 10 years, compounded sales growth has been 10%, which is good, which is decent. Last 5 years has been 15%. Last 3 years has been 18%. We saw last 2 years massive sales growth. Sorry, 2022, 2023, massive sales growth. 2024, 2025, very small. And TTM, trailing 12 months, only 5% sales growth. Profit margins, the compounded profit growth, 23% over the last 10 years, 15% over last 5 years, 25% over the last 3 years, and even this year, TTM, or trailing 12 months, last 12 months, 10% has been the compounded profit growth. Then, okay, so profits have grown significantly even this year, and they have usually outpaced sales growth, which is interesting. Then return on equity has seen massive improvements, it seems like. 10 years ago, it was 20%, which is still very high, which is still high number. Last 5 years ago, 5 years ago, 37% return on equity, 49% 3 years ago, and now 60% is the return on equity. So according to this, return on equity has seen a stable, and not even a stable, sustained, massive increase. So that's always good to see. Then we come to the cash flows of the company. Okay, these are the cash flows. Here we're going to take a look at cash flow from operating activities only for now. So in 2014, we have 175 crores of cash flows. 2016, 205 crores of cash flows. 2019, we have 224 crores of cash flows. So not a lot of growth from 2015 to 2019. Then 2020, suddenly we see a 311 crores massive surge. 2021, only 209 crores. And then from 2021 all the way to 2025, we have seen massive growth again in cash flows amounting to 480 crores in fiscal year 2025, 425 in fiscal year 2024, 425 crores. So if you're analyzing these cash flows just from a glance, we can see 2014, 2015, very nice, 30 crores of increase compared, okay, 30 crores of increase, 2014 or to 2015, and compared to 17 crores, that's more than 20% increase in cash flows from 2014 2015. Great. Then we see a period again, 2015 2019, stagnation. We didn't see a lot of revenue growth in this period also, but what we do see are very stable cash flows in substantial amounts. And again, in recent years, we have seen a massive increase, surge in cash flows, which is very interesting. Okay. And finally, I want to bring you this. These are some important ratios of the company, and pay attention to this. Working capital days. You see, it's in minus. It's in minus. All these years, it's in minus. Then cash conversion cycle. It's in 2, 3, 2, 3, very low numbers now. Working capital days is a metric. And if it's negative, it tells us that the customers of this company pay them in advance. Okay. So the company receives payments from its customers before it has to pay its suppliers. So it first receives advance payments. Payments. It receives money in advance from customers, and then it has to pay its suppliers. That is the company's business model, or an inherent part to its business model. Then cash conversion cycle. For what I understand, it means how long does a company take to convert its cash into revenue and vice versa. I may have to learn this term again, cash conversion cycle, but extremely low, 2 to 3 days. Very, very low cash conversion cycle, important. And if you see return on capital employed at the lowest figure, see ROCE, 5% 2014, it has also seen a substantial increase. Okay, 2019, 16%, and 2025, 30%, 30%. Then you also see another thing, debtor days. Debtor days. How many days does it take for a company to get the money from its customers for already supplying the goods? Okay, already supplying the goods, and you can see it's 3 days, it's 2 days. It takes only 2 days for the company to get its money back after supplying the good to its customers. Very, very low cash conversion cycle days, very, very low debtor days. Okay, negative working capital, increasing return on capital employed, increasing return on equity. What exactly is this business? Okay, what does this company actually do? Now let's discuss that. Yes. So here we have the investor presentation by Nirlon. Here we're going to learn what the company actually does. Company has been present in the commercial IT/ITES real estate sector for 17 years. Company is in the real estate sector, especially catering to ITES real estate. So information technology and information technology enabled services, ITES real estate sector. Uh, okay, real estate company basically. So and uh, yes, you can see CFO, cash flow from operations, 480 crores in fiscal 2025, return on equity 61%. We already saw this. Let's move on. What does the company do? This is what the company does. They own Nirlon Knowledge Park. This is a park that they built, and it's not a park where like people play and all that. Not that. So it's basically an industrial park. It has a lot of buildings with a lot of office space, a lot of buildings for offices. So companies can go and they can rent out this place. They can buy licenses basically. So Nilon licenses office space from Nilon Knowledge Park. All these people. It's located in Mumbai. So let's read, okay? It's located on Mumbai's Western Express Highway, one of Mumbai's main arterial roads. Okay. Uh, Nirlon Knowledge Park or NKP is located very close to educational institutions, hospitals, and recreational activities. So this park that they have made, this industrial park or an office complex, with a lot of facilities like net, Wi-Fi, security, CCTVs, and all that, in addition to just being buildings. So they have 3.08 million square feet of total office chargeable area. The total area that they can actually license out and make money from of this knowledge park is 3.08 million square feet. Let's move on. Let's move on. Okay. Important figure. Then, E. The park was built in 5 phases. Okay. And pay attention to the dates and the chargeable area. So, total area, constructed area is 4.77 million square feet, out of which 3 million is chargeable area, million square feet. Now, see, in March 20, see, okay, October 2009, 0.79 million square feet of chargeable area was built. In 2015, so October 9, 2015, we are seeing a lot of things being built. So September 2013, we have zero point 0.4. September 2015, we have 0.43 million square feet. Remember the dates. So in these dates, a lot of chargeable area was added. And if we see the sales growth, see 2014, 2015, 26%, 18% sales growth. So as the company builds more and more chargeable area, the company builds more and more chargeable area, office space, the sales growth increases massively. See, 2016, 2015, 2014, double-digit sales growth, 20%, coinciding with the increase in chargeable area. Okay. Then in 2022, it again built 1.16 million chargeable square feet area. Okay, 2022, and again 2022, 2023, again double-digit massive sales growth, coinciding with the increase in space. So as it builds more and more of these spaces, this revenue will also increase. Okay. So as of October 30th, approximately 280,000 square feet area was vacant in NKP, Knowledge Park plus NH combined. So big thing, a lot of area empty. Of this, 269,000 square feet has already been licensed. Okay. And the space has been licensed or agreed to be taken up by Deutsche Bank, Barclays, Citibank, EY, MUFG. So a lot of international respective clients. Then in fiscal year, quarter one fiscal 2026, the company had a revenue of 167 crores, EBITDA of 139 crores, EBITDA margin of 78%, profit before tax 90 crores, profit after tax 58 crores, 34% net profit margin. And again, it doesn't pay that much in tax. Like in really speaking, it really doesn't pay that much in tax. It has to pay this, but not right now. Okay. Then license fees, money coming usually from license, 145 crores. So majority of its revenue will come from selling these licenses. And here is the important thing. License fees and occupancy rates. So how much of its total space is actually being occupied? Here you can see the license fees in millions of rupees. So you can see it has seen a rise, a sustainable rise in total space. Okay. You can see its license fees are the red ones. So even license fees has seen a considerable increase, 145 crores in quarter one fiscal 2026. Then quarter four fiscal 2024, we're seeing how much is that? 133 crores. Again, it hasn't built anything new, any new knowledge park. Okay, the last phase was completed as we saw in fiscal year 2022. So last 3 years, it has been reliant on increasing its revenues by this occupancy rate. So you can see in quarter one fiscal year 2022, 90% of the total space was occupied or licensed out. This increased to massively 99.8% in quarter two fiscal year 2025. So massive increase in occupancy rate allowed for that 5% increase in revenue basically. And right now, I think after uh, what happened was Morgan Stanley, one of its major clients, decided to not renew its office space, change its office space, whatever. I think that's why it came down a bit. Occupancy rates came down a bit, but I think they have licensed most of it back. Yeah, yeah, they have licensed most of it back. Moving on, what we have one last thing to show: the balance sheet of the company. Here you can see it's all in millions of rupees. So as of fiscal year 2025, it has liabilities, borrowings of 1,146 crores. It has other financial liabilities, which we will discuss, importantly, other financial liabilities of 138 crores. Okay. Okay. These are, I think, customer advances, that liabilities. Then investment properties, you can see 1,869 crores worth of investment properties that I think refers to the knowledge park itself. So yeah. And this year, fiscal 2025, saw a massive surge from 53 crores of cash and cash equivalents, 163 crores of cash and cash equivalents. So more than twice surge. I don't know the reason, but could be because it recently took out a loan. So yes. Finally, we have one more thing. What? Where is it? No, no. Okay, sorry. We have one more thing. Yes. This is from its annual report. Here you see revenue from operations. Okay. It's a breakdown of revenue. So license fees accounted for, okay, these are numbers are all in million. No, these are all in lakhs. These are all in lakhs. Okay. So license fees accounted for 56,065 lakhs or 560 crores worth. Other operating income, okay, and we see other revenue coming in. So we see 6,576 lakhs or 65 crores coming in from common area maintenance and 5.59 crores coming from recovery of administrative costs. So a part of the income comes from licenses. We have also have common area maintenance and administrative costs. And finally, in other financial liabilities, again a part of its annual report, other financial liabilities in current, it's deferred license fees pending amortization. So the office is the companies who buy out this or they rent out the office space. They have to pay in advance. So they pay before the service has been provided by Nirlon. So they, let's say they purchase a 12 months license fee. They rent out an office space for 12 months. So it's recognized as a liability. So this is not a bank liability, but it's a liability because they now have to provide that service. If they don't, Nilon will be penalized if Nilon doesn't provide the service, of course. So these are the other liabilities. A big portion of them is just basically standard license fees deferred. I think so, deferred in advance. I think so. Yes. So that was it. That was Nilon. So company can only see massive growth as it's building up new and new office space. 3 million in total chargeable office space area, 3 million square feet. Great cash flows, great cash flows. If you want to notice one thing, no, I think it's done. Yes, great cash flows and the interest coverage we saw 4, that was good. We didn't really analyze the balance sheet. Can do that. Yes. So current liabilities, fiscal year 2025 is this corner, the one below me, just directly below me. So current liabilities, we see 138 crores of other financial liabilities. We see 2.13 crores of trade payables, very low. 6.8 crores, no, sorry, 68 crores. Yeah, 68 crores worth of current tax liabilities. Okay. In current assets, we see 160 crores of cash, massive increase, or 25 crores of other current assets. So current assets and current liabilities actually seem very, very equal. And portion of these current liabilities, other financial liabilities, I think should be customer advancements, advance payments from customers. They are in fact recognized as a liability until those services are given to them. So if an office or company rents out a space for 12 months and they pay them in advance or a portion in advance, let's say 3 months in advance. So till nil loan has not given them that office space or that office space has not been occupied by the company for 3 months, it will in fact be recognized as a liability. So that was nil loan limited. Great cash flows, great return on equity, great return on capital employed, cannot grow unless, it makes more space. And analysts and its shareholders are really not happy with the company. So you can read the con call. We can do that in the next segment. So, bye.